I tend to look at the leading indicators. I work in the recruitment industry, as you know, and I tend to keep an eye on what's slowing down recruitment-wise, because recruitment is really a leading indicator of future financial performance, KPI, if you like, because, of course, we will get the indication that there's a hiring freeze with certain clients or in certain sectors generally as a trend, but that will then translate. Well, they're obviously seeing internally a drop in revenue. But for investors, you won't see that until the end of quarter reporting, but we will see that early. And so we saw very early in 2023 steep decline in tech recruiting, when all of the over-subsidized, if you like, or we say over-subsidized, companies who'd hired too aggressively during the pandemic in the tech sector now having to thin out some of their cost base as people go back to brick and mortar stores and so on. So we start to see that there. And I have to say it's mixed, as I do keep an eye on the recruitment firms globally and how they're performing. It's quite mixed, actually. Some are doing okay, some are not doing so well. So there's no clear signal I can see yet. I'm also keeping an eye on new home starts and the building companies as well, to see how they're performing. And at the moment, it seems okay, but there are some mixed signals, it must be said. And the question that I really have for you actually is, my suspicion would be, given the inflation at the moment, which can be mixed, of course, because it just indicates higher prices, it doesn't necessarily mean there's more economic demand unit wise, i.e., they're selling literally more TVs. It could be that, essentially just price inflation, selling less TVs at higher prices. So what would be the economic indicators we would look at that would tell us whether people are basically maxing out their credit? And because that would strike me as probably one of the indicators that we're getting a little bit close now, that people have maxed out credit cards, they're actually living on credit rather than they're just more affluent and buying more stuff, for example.
I agree, and I think uh, people hate to adjust their standards of living down, and so if they can um, continue spending what they were used to, they'll switch to credit if they're able to do so. Uh, Now, unfortunately, it's not that easy to look at these statistics. You'll have to look into the reports from some of the larger banks. They will tell you uh, and give you a breakdown of their different divisions and how they're doing. And one area to look at is their write-offs in consumer credit. The moment you see that spiking up, and they have to do it from a regulatory perspective. So it isn't, they can't really mask the numbers. They have different buckets of delays of people paying back their credit cards or their consumer loans late. And depending on how late they are, there are certain capital um, requirements that go to cushion potential losses up until beyond a certain period of time. It could be 180 days, where it's usually a full write-off. And so I would look exactly at that and how those repayment delays are evolving over time. If there may be specific issues with the underwriting ability of a certain bank that may, paint a certain picture. And so I would look at perhaps not just one bank's report, but several, and see how generally they're doing with their consumer credit books. Again, information is somewhat delayed, though. You'll get those reports, if you're lucky, 3 months late, in a sense, with the quarterly reports. A lot of the banks outside of the US don't report quarterly, they may report yearly. And so you should look out for industry reports, perhaps from the Bankers Association, from the central bank, maybe even from one of the consulting firms that can have access to that information, and they usually tend to aggregate it into like an industry report. So I would definitely look at that. And I agree that could be a good indicator of how things are going. Um,
But I think the thing that I would say to all of the subscribers to my channel and your channel as well would be to be prepared, to make sure that you are in a very strong position financially, that you've got 3 months of salary in savings. If you don't have that right now, you need to start saving and just, sacrifice the Starbucks and whatever it is for a little bit, to make sure that you're in a really strong financial position that you could ride out any potential problem. And I know a lot of people would struggle to do that, but it's very, very important, I think, for people to make sure they're very well prepared, because what we did see in the 2008 financial crisis is people were not just over leveraged on, their mortgages and stuff. And as you said, people adjust to their lifestyle, but people were totally unprepared in terms of savings. Um, and of course, one of the upsides of, a big market correction, certainly the bursting of a bubble, is it will overcorrect, and then there will be an investment opportunity if you still have your job. But if you don't
That's right.
have your job, you certainly cannot afford to do investing when you don't have a basic income. That would be a terrible idea. So keep some dry cash, will be the in savings, just to cover your expenses, to look after your families. Seems to be the right thing to do at the moment, and keep an eye on these indicators. And as we said about credit, what is it? Credit write downs was the thing that we should be looking for. So certainly that's one of the
Absolutely.
indicators I'm going to keep an eye on. Maurizio, thank you so much for sharing these amazing insights today. Please subscribe to the channel if you found this very valuable. We would love you to be a subscriber to the channel. We share a lot more great information about this and broad topics as well to do with leadership, management, finance, and life in general. Maurizio, where can subscribers find you and subscribe to your channel?
Sure. Thank you, Russell. It's been great talking to you as ever. My channel is called Tech Shift F9. You can find me on YouTube, Spotify, Apple Podcast, all sorts of places. And I love having these conversations, and I hope to come back on your show.
Thank you very much, Maurizio.